Every time a central bank raises interest rates, prints money, or rescues a failing system, it shapes the lives of millions. But central banking did not begin in government buildings or marble halls. It began in small workshops filled with gold, locks, and trust. This is the story of how goldsmiths became bankers and how central banking was born. Long before central banks existed, money was physical. Gold and silver coins were valuable, but they were also dangerous to store. Wealth made you a target. In medieval Europe, there were no secure vaults, no regulated banks, and no deposit insurance. If you had gold, you had a problem. How do you keep it safe? The answer came from an unexpected place: goldsmiths. Goldsmiths already had strong vaults, guards, and expertise in handling precious metals. People began depositing gold with them for safekeeping. In return, goldsmiths issued handwritten receipts confirming the amount stored. These receipts were simple promises: your gold is safe and you can claim it any time. At first, these receipts were just storage proofs. But something remarkable happened. People realized they didn't need to retrieve the gold itself. They could simply exchange the receipt. If everyone trusted the goldsmith, the paper became as good as gold. Slowly, receipts started circulating as money. This was a quiet revolution. Paper had replaced metal, not by government decree, but by trust. Goldsmiths noticed another pattern. Most depositors rarely came to withdraw their gold at the same time. The vaults stayed mostly full. That meant the goldsmiths could lend out some of the stored gold or issue extra receipts while still meeting normal withdrawal demands. This practice became known as fractional reserve banking. Goldsmiths were no longer just storing money. They were creating money. By issuing more receipts than the gold they physically held, goldsmiths increased the money supply. They charged interest on loans. Profit flowed in. The role of the goldsmith quietly transformed into that of a banker. But this new power came with risk. If too many people demanded their gold at once, the system would collapse. This fear, known today as a bank run, haunted early banking. Trust was everything. Once confidence disappeared, paper became worthless. Governments soon realized the importance of these bankers. Kings and states were constantly short of money, especially during wars. Raising taxes was slow and unpopular. Borrowing was faster. Goldsmith bankers began lending directly to governments. In return, governments offered privileges, legal protections, monopolies, and influence. This alliance between money and power marked the next stage of banking history. But there was still a problem: chaos. Private banks issued their own notes. Quality varied. Fraud was common. Crises spread quickly. Economies needed stability, not just profit-seeking lenders. This is where central banking began. The first true central banks emerged not to control economies, but to solve instability. In 1694, England created the Bank of England. It was founded to lend money to the government during war. In return, it gained authority over national finances. The Bank of England did something revolutionary. It centralized trust. It issued standardized banknotes. It regulated credit. It acted as a lender of last resort. When other banks faced collapse, the central bank provided liquidity to prevent panic. This role, stabilizing the system, became the defining function of central banks. Other countries followed. Sweden's Riksbank, the Banque de France. Eventually, central banks spread across the world. Central banking evolved into a powerful institution with three core responsibilities: managing the money supply, stabilizing the financial system, acting as banker to the government. Unlike goldsmiths, central banks did not exist primarily for profit. They existed for control and confidence. Over time, money moved further away from gold. Paper currency became dominant. Later, gold standards were abandoned entirely. Money became fiat, valuable because governments and institutions declared it so. Central banks became the guardians of this trust. Interest rates replaced gold as the key economic tool. Instead of controlling money through metal, central banks controlled it through policy. With one decision, they could slow inflation, stimulate growth, or trigger recession. This power made central banks both respected and feared. Critics argue central banks manipulate markets, create bubbles, and favor elites. Supporters argue they prevent collapse, protect jobs, and stabilize economies. Both views have truth. But one thing is certain. The system traces its roots back to goldsmiths and handwritten receipts. Modern central banking still relies on the same foundation: trust that money will hold value, confidence that institutions will act responsibly, belief that systems will function under stress. The technology has changed. The principles have not. Today, money is digital. Central banks no longer guard vaults. They manage databases. Transactions move at the speed of light. Yet the risks remain familiar. Inflation, debt, crises, and panic still threaten economies. And once again, central banks step in, raising rates, printing money, or rescuing banks, echoing the role goldsmiths once played centuries ago. The journey from goldsmiths to central bankers is not just financial history. It is a story about human behavior. People seek safety. Systems grow. Power concentrates. Trust becomes institutionalized. From locked vaults to digital ledgers, central banking evolved as a response to chaos, an attempt to balance freedom and stability, profit and protection. Understanding this history helps us understand today's world. Why central banks matter. Why markets react to their words. Why money is ultimately a social agreement, not just a resource. The next time you hear about interest rate hikes, inflation targets, or monetary policy, remember where it all began, not in boardrooms, but in small workshops where goldsmiths guarded metal and unknowingly invented the future of money. If you enjoyed this deep dive into the hidden origins of central banking, like, subscribe, and stay with us as we uncover the forces that shape money, power, and the global economy.